So from your vantage point in fintech and inclusive digital lending, where are you seeing the strongest signals that global capital is shifting? Is it geography? Is it demographics? Is it digital adoption? Give me a sense of what's going on.
Yeah. Let me see, can you hear me?
Yeah. Yes, we can.
So I think, so the region is experimenting, fintechs that in just a few years, they grew to be huge companies. For example, Mercado Libre, which is a very strong division, fintech division, is worth more than $100 billion. And then there's Nubank coming in from Brazil that's worth almost $90 billion. So we're starting to see kind of like how fintech and AI combined to fintech is getting a lot of attraction. Ourselves, we're seeing, so we've raised, combined in equity in debt, we've raised about $500 million. And we've partnered with merchants like Amazon, Walmart, Shein, Temu, coming from multiple parts of the world. And they're doing significant investment from e-commerce as well in infrastructure. And I think that the structural point that we're seeing is that, number one, we have, the speed of internet has been increasing phenomenally in Mexico, especially in terms of mobile internet. The e-commerce, specifically in Mexico, we passed from being like about 3-4% of e-commerce of retail sales. Right now, we're like about 15%, 16%. So at the level that we're going right now, it could potentially surpass even countries like the United States. And then if you think about, specifically Mexico from the financial inclusion standpoint, and you think about the GDP, the gross domestic product of the unbanked population in the world, you can see that Mexico would be the third largest opportunity in the world. Its first place is the United States, second place is China, and third place is Mexico. So the situation is that there's a lot of potential. The market is really much unserved. There's companies that are providing access to digital financial services and e-commerce services, and that the region is just prone to disruption. Like, for example, if we think about Spanish-speaking Latin America, the GDP of those countries combined is more than $4.5 billion, which would essentially make it one of the fourth largest countries in the world. So I think it's just a matter of time in which the world discovers how much potential we have in this region and how much it's growing, and based on and the potential of the demographic is there for people to go and invest in that region.
Okay, fascinating. Thank you for that. Fernando, great to have you sitting right next to me. Invariantes is really fascinating. And we were talking, we even heard from His Excellency the President, as well as from Maktab, as well as from His Excellency Al Mansour. But one of the things is scalable, bankable projects. That is what Invariantes is doing. So my question to you is, because you've helped scale businesses in various parts of the world, what is everyone missing when it comes to opportunities in Latin America? Are they underestimating the region and the opportunities?
I don't think the region is being underestimated. I think it just lacks a couple of key elements to really shine. One of them is access to capital, and I know there's a lot of investment in Latin America to expand its potential, but at the early stages, there's abundance of capital. A lot of early stage fund managers are there, but there is lacking of growth capital. A few companies like Kueski have achieved financing past the early stages, but there's definitely not enough of it to help a company scale. Second, to make Latin America shine, definitely regulation is needed, in the sense that if you take Brazil, there's an interesting statistic that I just learned, that it has the higher lawyer per capita base in the world. You can imagine that's because they need to cut through all the red tape to manage to scale the company. This is an obstacle for startups that need to grow quickly with a regulatory framework that's friendly. Also, cross-border sales and capital structures are not there. If you are born in a country like Peru and you want to grow to the rest of Central America, you have to navigate different legal systems. So that's another key point that's missing, that I hope is to be solved by organizations and events such as this. And last but not least, of avenues to exits. As venture capitals, we also always look for exits, and there is not a robust public market system to produce IPOs, and the big corporates are not used to absorbing or acquiring companies. So with those three, being access to late-stage capital, regulatory framework that's stable, and exit pathways, I think Latin America will shine, and it's not a matter of talent because there's an abundance of it and a large market opportunity, like Kueski founder just said.
And a lot of resources as well, and interesting sectors. I mean, just to reiterate that, that's really important, is harmonization of rules is actually what deters a lot of investors, and I think it's super important. We'll come back to you in just a bit. Daniel, hello, sir. Very good afternoon. So Alcazar Energy, you focus on renewable energy investments across emerging markets, and you're building long-term utility-grade power platforms. So let's look at Latin America as, what we're seeing right now, what you're doing. Talk to me about deployment and that being selective, how that's hampering your investments, and what specific policy, financing, or partnership structures most quickly convert to investor interest and bankable energy projects.
I'm a bit of a different guest. I am from Colombia, which is in Latin America, but I moved to the UAE 17 years ago, during the very early days of Masdar. So I had the chance to work for the government of Abu Dhabi early on, and then we started an independent investor in renewable energy. We became the largest private investor in countries like Egypt, Montenegro, Jordan, Macedonia. Our projects have mobilized in the order of $5 billion between project finance and equity. And so I look at your question from an energy perspective. And you made a point about uncertainty, which I think applies very much here. And it's something that here in our neighborhood, we look, for example, at energy security. It's unbelievable. We have countries such as Egypt, that is 84% dependent on gas today. Not many people know that Egypt imports gas from Israel, which has a very negative impact on the GDP as well, and on their national debt. Mexico is very similar. Mexico, over the years, became a little bit addicted to U.S. energy. So today, 70% of the energy that is produced in Mexico comes from U.S. natural gas. So and Marc last week, I thought, put it extremely eloquently in Davos, where he said that the world where we can have these fundamental dependencies is probably not a world that is behind us. You look at Latin America as an investor, it's not just Paraguay, Uruguay, Costa Rica, 95 to 100% energy independent. Colombia, where I'm from, it's not just very nice bananas and coffee, but also 80% hydro. Brazil is even better from a hydro perspective. And Chile has done an amazing, it's a great IFC test case, respectfully, where they have done an amazing track record of investing in wind and solar, and now they're above 70%. So I think there are lots of things that we have to learn from the region. When you talk about partnerships, I think the number one, so that's energy security, but the number one point I'd like to leave you guys with is investment security. And my first project with IFC was when I was at Masdar 14 years ago. IFC led the financing of the first wind farm in Jordan. And over the years, I've done, several projects with IFC. And what they have is they have this ability to come to a region and understand ESG, understand compliance, understand the families you can invest with, understand the current government and the previous governments. And when you put the UAE's ability to mobilize institutional capital, when you put the this country has become a financial capital of the world during the last 15 or so years. When you look at their ability to mobilize institutional technology, and you make that energy shine through the prism of IFC, of compliance and ESG, I think that could be a great story for Latin America, because it becomes a very well underwritten story. Those are my 5 cents.
Thank you so much. Okay, great. We'll get back to you in just a moment. Marc Carette from Emirates Global Aluminium. Hello, sir. How are you doing? Okay, fascinating company. You're firmly in the supply chain of steel. And my question to you really pertains to, firstly, industrialization, supply chains really in focus right now, as countries are knowing that this is very much tied with national security. In terms of securing capital right now, where are you seeing opportunities? What are you looking out for as those bright spots that perhaps other investors are not looking at?
Thank you. Good afternoon. Can you hear me?
Yeah.
Yep. And I'll just correct, it's aluminium, aluminium business, but I think it's the same for steel as well, really, any metals. I was at Davos last week, and you can see all of the discussions really focusing on the geopolitics around really the shifting trade channels, friendly nations, unfriendly nations, how do you actually secure your supply chain? So traditionally, the resource base was very, very important. Second of all, the energy base. So we see Latin America actually extremely well endowed in both of those, looking at copper, looking at lithium. But even in our business, aluminium, the upstream, Brazil in particular has played a very, very important role in terms of bauxite, alumina, for all of the smelting capacity, even in North America and Europe. The hydroelectricity and actually just renewables in general in Latin America has tremendous potential as well. So in general, as we move towards a more sustainable world, these will be important. I mean, aluminium, the energy intensity of aluminium is one of the highest of any metal. So we're really looking for this stranded energy that can be used. We've been able to develop a very, very strategic aluminium production here in the UAE. We produce about 4% of the world's aluminium here in the UAE, which is something not a lot of people know about, but actually it's quite a significant industry here in the UAE. Largely because of abundant, low-cost energy and increasingly becoming green. The UAE has a very strategic, and we talk a lot about vision. This vision also to decarbonize the grid, to look into solar, to nuclear, will greatly help the industry here. So I think in terms of where will capital go, at least in mining and metals, capital will. I think energy is probably the biggest point. You can see not just the AI infrastructure development, but actually for mining and metals, we will need metals to do all of these things. Population growth around the world, industrialization of emerging markets, all of this will require a lot of metal. So energy will be very, very important in the equation. We've heard a lot also about just political vision, political stability, industrial policy that's predictable over the long term. In metals, we're not talking about 3 to 5 year investment profiles. We're looking at 50-year investments, 100-year investments. So I think the capital will increasingly go to those countries that can provide a vision, much like the UAE has. I think in terms of stability, you know what you're getting in the UAE. There's a very clear vision of where things are going to go. So to make these large capital investments is easier, I would say. The third one is probably logistics as well, is one of these elements where, as you see scarcity in certain metals and minerals, starting to look into other geographies, even Africa, for example, a lot more investment going there, and you're seeing that the logistics is the issue that may be holding back some of these, the bankability of the feasibility studies. So once again, UAE has a very, very strong position in logistics, ticks the box on energy, ticks the box on stability. So I think a lot of capital will come here, but increasingly we'll see those trade corridors with the global south increase a lot, Latin America, Africa, Southeast Asia to grow as well.
Okay, great. Okay, we've got 5 minutes. I'm going to very quick questions to each of you. And actually, Marc, I'm going to stick with you because it's one thing to secure critical minerals and it's another thing to process them. And I think that that's really important for countries right now. And of course, aluminium, very energy intensive. We're talking about a smelter that sometimes, can cannibalize an entire country's, output. So give me a sense of how you're looking at these opportunities, specifically for Latin America, that is so resource rich. And instead of exporting critical minerals raw, would be really thinking about, processing locally to capture that entire value chain.
So I would say for Latin America in particular, again, I go back to the energy question, the richness and the development of energy infrastructure, particularly green energy, will be extremely valuable for Latin America in general. In particular, as you look towards markets like Europe, where CBAM will be coming into play, especially today, CBAM came into play, but it covers Scope 1 emissions mainly. For industries like aluminium, as Scope 2 comes into play, date still uncertain, but let's say around the 2030s, very big opportunities for countries that are able to produce metals using renewable power. So that's certainly the vision for the UAE to move in that direction. Countries like Brazil and other countries in Latin America that are already completely powered by hydropower already have that natural advantage. You can see countries like Canada, like the Nordics also benefiting from that. So I would say that's probably the biggest strength that Latin America will have in that sense.
Fascinating. Okay, thank you for that. All right, so Daniel, quickly to you. Where are you seeing the biggest opportunities right now?
So I see it as a step one, step two.
Yeah.
There are some countries that are energy dependent, fossil fuel dependent, so they are importing gas, paying 10 cents to produce a kilowatt hour. They could not be importing anything and doing it for 3 cents. So as a step one, that is obvious. But we see countries such as Uruguay and Paraguay and others, Jordan is a local example, that have been very successful at producing cheap energy. And there, when we sit with the ministers of energy of these countries, the next step is to bring the knowledge to create green steels locally, or high-grade polysilicons. Argentina is an excellent example where they have the stranded gas in the south of the country, and they actually managed to build a number of aluminium companies there, thereby exporting energy-intensive products. So I think people need to discriminate in their underwriting process between countries that need the transition just to save money. Those are excellent deals, by the way. But or countries that already have the cheap kilowatt hours and they need to do something with them. Because maybe the Europeans want to buy the green steel from you and not from someone else. There are lots of opportunities today that are right in front of us, and the technology is right here.
It's a really important point. I wish I had more time on this because I'm very passionate about it. You need baseload, but you also have to be realistic. So absolutely. Fernando, to you. We've got a tighter capital environment. I mean, frankly, there's so much uncertainty. I'm just seeing what's happening with gold and silver. That's another conversation for another day. But there's a lot of risk aversion, but also this appetite to invest, looking and chasing returns. And obviously, there's a balance here. What are you seeing as potential issues when looking for capital to deploy in really exciting businesses right now?
Well, I have to shift the conversation back to venture capital, which is the asset class that we focus on. But I think, for example, from an investor's perspective, I think Latin American investors shy away from it a bit too much. But in the US, it's an asset class that for the past 40 years has performed at a 20% IRR year over year.
Do you think perceptions of risk towards Latin America is still very skewed?
I do think so. And it's not without our fault as well. You try to think about 70-year plans like the ones they're deploying here in Latin America. Every 4 years, you shift governments and perhaps the agenda shifts, so you can not plan long term like a venture capital company needs. But I think the opportunity is there for venture capital in Latin America because it's the low-hanging fruit. You can operate without too much competition, unlike a saturated market like the US, and you can kind of operate as a monopoly, like Peter Thiel always mentions, and expand your moat as a startup and get to that point where you really scale. So I think Latin America is primed for VC, and also perhaps not as a imitation of the US, but focused on the companies that my former panelist just mentioned that are industrial tech, innovation in energy, logistics, and commerce.
Adalberto, I'm giving you the last word, sir. Attracting international institutional investors, how difficult is that? Is there faith in what you're doing?
Yeah, so number one is I agree with President Santiago Peña that the whole region just needs exposure, right? Yeah. And specifically for Mexican companies, I think it's just a matter of time, to be honest, because there is a list of companies that are just waiting to go public in Mexico, and we're gonna demonstrate that the region is really attractive and there could be exits. It's just a matter of time. It's also just a matter of time that we demonstrate the potential of, for example, specifically in Mexico, the North American Free Trade Agreement, the potential that we have in terms of the nearshoring, the potential we have as a region, generally speaking, within Latin America is really incredible. There's significant technical talent. There's the countries typically they have strategic neutrality from the geopolitical standpoint. So to be honest, I think it's the geography and the resiliency that the region has been having is it's just going to be inevitable, and we just need time for us to go and give more exposure and make it evident for the rest of the markets.
And if I could just add one last tidbit of information from data is young, but from 2017 to date, early stage VC in Latin America is outpacing the S&P. So it's going on the right way. It just needs a bit of time to produce those exits.
Right, fantastic. That was really fascinating. Ladies and gentlemen, round of applause for these fantastic guests.